Hello guys, and welcome back to the channel. Palantir went below $10. What are you gonna do? Alright, so we're not gonna be so downtown on this whole video. We're gonna take a fun approach at this crazy scary thing, but I do want to take this up. So Palantir has come down to unthinkable levels. Most shareholders who have bought in, basically everybody's down on the stock except for the people who have bought on the IPO. So naturally you would ask, should I sell this stock? Then on this channel we are long-term investors for the most part, and it's very important that you look at what's happening with the company. So if you're in doubt or you're sad about Palantir, this video is for you, and I'm going to disclose at the end of the video what I'm going to do with my Palantir position. So what is going on in the company? So from the stock price, which is crazy, you would think that the company is about to go bankrupt, they're losing customers, it's a broken business. But if you read the news, the company actually keeps extending partnerships. So here is the latest example. Palantir deepens relationship with UK Ministry of Defense, okay? So if you go to the website Palantir Daily, it's a very good website. You can continuously get news about Palantir, and if you read the news, it's all about how Palantir is creating new partnerships or it's extending relationships with existing customers, or the specs that they own are making new businesses and are doing really well. So basically the company is doing really well. Then another thing that made the company not so good in this market environment is that their product is very hard to understand. And they have made a partnership with a YouTuber called CodeStrap where they do detailed videos of their product. They have also made their own videos on YouTube where they explain their products and they give more insights, and I believe that this is the thing to do. Then there is this macro thing that, have you heard this country called Russia attacked Ukraine? I'm sure you never heard about this. And this has caused the US and European defense budgets to balloon. And this is a very good backwind for Palantir. So if it's not the company doing bad, then what is doing bad? Then it must be something else hurting them. So it must be that the inflation is hurting them. But oh wait, they are a company that is completely inflation proof because they have no loans, or basically very little loans, 200 million loans. I believe they have 2 billion on the balance sheet in cash. They can pay back their loans whenever they want. Then their customers must be hurt by the inflation. But then you start thinking, okay, who are their customers? They are American, Canadian, and Western governments. They're not going to run out of money, inflation or not inflation. And the other customers, the commercial customers, are Fortune 600 companies or Global 600 or whatever they're called. Basically the biggest companies on the planet. And those companies, when they need them, they're just going to buy Palantir regardless of the cost. So this is not hurting them. Then it must be that the demand for their products is going down, okay? But think about it. We have this war that's demand up. Then we have a chaotic situation with the supply chains, which means that more companies are reaching for better solutions for, to handle their supply chains, to handle their data. So actually the demand is growing for their products. So basically it must be that the market is completely misreading this company. But before we go ultra bullish, I do want to give you a warning, because the stock market can stay crazy longer than you have money. So there is a few things that Palantir can do, they're about to report on Monday. I believe that the stock has a high chance of falling after the earnings. So they can report a stock-based compensation. Basically, if they don't report that the stock-based compensation is going down, I believe it's going to crash the stock price. However, they have said that they would rein in the stock-based compensation and they would go down to 3%. And this is what I count in my model. However, if there is something about this that the market doesn't like, it's gonna send the stock tanking. Then their margins could get hurt because they have been hiring a lot of salespeople. I'm sure that their margins are going to get hurt. My question is more like how much. They have had a 30% adjusted margin if you look at their investment reports, which is fantastic. So obviously if their margins go down to like 10%, that is a huge warning sign. But if it stays like 27, 28, despite having all these salespeople, because they have quite long sales cycles also. So it might be that they need to pay the salespeople for, 6 months before they start closing deals. And, they have to foot this bill, and that can really hurt the margins. And this can be a slip up on the earnings call. but I don't think that this is the case. Then if they project less than 30% growth, because they have indicated this, the market is very, very crazy. So I believe even if they report 29.99999% sales growth, I personally think that they will beat the 30% very comfortably because of all the demand and everything that has been happening in the world. And if you follow this blog and see all the new partnerships that they have, I would be surprised if they don't beat the 30%. But the market has been so crazy that if they report 29.99999, it's like sell, and the stock is going to fall. And again, since the market is as crazy as it is, if Alex Karp's hair is more messed up than usual, then it's probably send the stock plunging. So just because I have all these bullish views on the market, it doesn't mean that the stock is going to go up now. I'm pretty sure that on the long term it's going to go up, but it's not sure that it's going to go up now. Now, what's really interesting after we gone through this is to look at the actual model of Palantir. So what's more interesting is actually the model for Palantir, and let's see how this got affected. So the current market cap is even lower than, because I did this on the 23rd of April. By the way, you can find this table on Patreon. If you join our Patreon, it's $5 a month, and you find all the valuations of the companies that I cover. And then what's fantastic with this table is that you can download it and then you can play yourself with it and see how the valuation would be affected if they start growing 20%. It readjusts everything. If their margins go lower to 28%, it readjusts everything. If the dilution is more, and so on, you get the picture. So basically, obviously, what I'm going to be looking at is how much revenue they increase. As I said, I do believe they will comfortably be 30%. I would be very surprised if they don't. Then I will be on the lookout for their operating margin. This is from their last year's bookkeeping. And again, here, this is where, you can attack this model, because they are technically not profitable. That's because they have the stock-based compensation, which you use to attract very good employees. However, this is not a cash item, so this is like a minus that exists in the bookkeeping only, but it's not really a minus. And if you adjust for this in the accounting, they would have a 31% profit margin. And if you lower that margin, you say that's too much. Let's say you are more pessimistic on the company and you say that it will be 25% profit going forward. Let's see what happens. Again, then there is the dilution. They promised that they would rein this in. If they stay at I calculated with 3%, that's a bit higher than what normal companies do, but a lot lower than what they are doing currently. Then these are the years, and I want to know what the price is going to be in 2025 and in 2030, because I'm a long-term investor, right? I'm very, very confident that they will grow 30% per year up to 2025. I'm hoping that, they will grow that much up to 2030, but this remains to be seen. I'm going to obviously reevaluate as we get closer. So now a second thing, I know how much shares they're going to have, and then, I dilute the shares with this 3% per year, and then you get a PE, and if they're growing at 30% per year, obviously their PE is going to be higher. I think I looked at what the sector that they're in, software as a utility. I show it in another video. Those companies trade at, I think it was an average 2.2 PEG ratio, and I think all the way up to 90 PE. So I'm just going to count here at 57 PE and 1.9 PEG ratio. That would give a market cap of $62 billion, and that would result in a share price of $29 in 2025. And here's another cool thing that I did here is, if you want a 30% return compounded per year for 2022, remind you we're halfway through 2022, then the stock price would have to be this 1021. So, you always want to know, should I buy the stock? And this is not financial advice. I want you to make your own opinions, but it depends on what returns you're comfortable with. If you're happy with 15% per year, then you're okay with the stock price being at $16. If you want 30% per year, then you want the stock at or below 1021. And if you want 35%, you can play with this, then you want, again, compounded annual return, which is crazy, then you want the stock to be at 875. Again, my thinking on the stock is that it's going to have a 30% operating margin and 30% growth, and I'm very happy with a 10% return. So for me, as long as the stock is below $12, it's a steal. So what did I do today? As soon as the stock dipped below 10, I managed to snag up, I prepared the numbers, it's in 2 portfolios. I bought about $31,000 worth of Palantir, and I lowered my cost average for the stocks to $10.75. And I am very, very happy with this. What I'm doing now is I'm patiently waiting for the market, and if the stock goes down to 8, I'm going to find a way how to send more money to the stock market and buy more of this fantastic stock. I'm a great believer in this company, and I believe that this is an opportunity of a lifetime to be able to get this stock this cheap. I did another video that, the price might be this low for the next, 1, 2, maybe even 3 years. And if it is this low and the company is reporting great numbers and is expanding 30% per year, it's all the better for us because we just get to buy more shares and then we will enjoy the fruit of our clever investing. So I hope you like this video. Let me know what you think about Palantir. Let me know how freaked out you are from a scale of 1 to 10, and let me know if you're going to buy more at this price. And I will see you in the next video. Ciao, ciao.